From being orphaned very early on, which I'm sure wasn't an easy journey to be on, now over 300 crores in revenue and 1 million customers. What does it feel like?
After my parents passed away, they also left us with a lot of debt. And I was only about 9 years of age. I wasn't pursuing stock markets like a hobbyist. I was pursuing it like nothing else existed. Gambling. Dream 11 or the other contemporaries essentially is about betting on sports or rummy or much bigger than poker in India.
Some of these new age IPOs that are coming out at 100 PE or 230 times PE, the Lenskart example, how are the investors going to make money on those trades?
IPO stands for it's probably overpriced. The average holding period of IPOs is surprisingly short.
Of course,
It's like 2 weeks.
Yeah, put like 3 biggest learnings in terms of investments and also watching others in terms of how they invest.
Recognize the hazards of herd mindset. To be able to create wealth, you need confidence in your investments. And if you want confidence in your investments, you need a lot of research.
You've sold off your US stocks and only investing in India. Is that true today as well? Hello and welcome everyone to the India Opportunity Show. I'm your host Shrishti, and today I'm thrilled to welcome Tejas Khoday on the show. He's built one of the most successful brokerages out of the country. They do over 300 crores in revenue and have active 1 million customer accounts. He's been able to bootstrap the company to this phenomenal success. Today, in this conversation, we talk about all things macro, how the world order is shifting, what impact will it have for the India opportunity, and also the behavior that he's noticed on his platform of retail participants. You'll get to understand a lot about psychology, stock markets, and also investment philosophy. He usually focuses on a very concentrated portfolio, typically 3 to 5 stocks at a time. I challenge him on why he doesn't diversify and so much more interesting stuff through the conversation. Hope you enjoy watching. Hi Tejas, welcome to the India Opportunity Show. Thank you for doing this with me today.
Thanks for having me. Lovely.
You've had such a fantastic journey from being orphaned very early on, which I'm sure wasn't an easy journey to be on, to building something which is now over 300 crores in revenue and 1 million customers. What does it feel like?
It feels like we're just getting started. That's what it feels like. We've been through a lot. It's been quite a journey, 10 years in the making, but it still feels like we're just getting warmed up.
But when you're just getting started, there's so much that you have to learn and so much that you don't know. So how did you start?
Because nobody could answer questions about why markets and their valuations change on a daily basis, I started to read. I was quite a nerd. I would either be playing a sport or you'd find me in a library or a bookstore. Um, and I was good at learning things by myself. That helped me. But beyond a point, I felt like in life I knew I needed to do a business and finance is attractive. So I dropped. My first job was at a stock brokerage firm. Um, I graduated, finishing my BBM in finance. I did my master's, and so it's just been that one-track mind trying to explore and find out more about the markets. Yeah.
A lot of market participants in today's time are first time market entrants post COVID, right? But a lot of them don't have the foundational knowledge that is really required to become a successful investor, where they might have started investing or trading because a friend was doing it, or, it was the talk of the town. And equities these days is over glamorized as well, right? What were some of the things that you noticed when you started, and how did you build those foundational frameworks for yourself?
I'd say brick by brick, the foundational frameworks aren't built on day one. Making mistakes, like failures, are the building blocks for any kind of knowledge or wisdom. And so I learned by making mistakes. I started investing in IPOs actually. So I was one of those backbenchers who studies in the last 1 week for an exam. And so I was with one such friend, one of my best friends, studying at her house, and her father had retired, investing his pension money into the stock markets. And so he lent me some money, had me open a demat account, and I got started like that. made money, lost money, but not too much. But that got me to understand more about how things work vaguely. So this whole framework thing, I'm still making my framework, by the way.
Hmm.
It's a work in progress forever, I guess. But with respect to the herd instinct, people investing because their friends invested, that's not how I got started. I got in there because I felt like it was beautiful for the love of it to just the whole dynamic aspect of um, the interplay between money, business, and economics. It's just that that really excites me. Yeah.
Hmm. What is the basis of that love? What gives you that pull towards it?
Besides me being a curious person in general, my father was a businessman who went bankrupt in the late 1990s. And the sad turn of events led him to end his life. And so I wanted to understand how and why such things can happen, although one is a good quality entrepreneur. Right? He
Hmm.
was a good businessman, and how can somebody who does things the right way, albeit a little more aggressive than the average businessman, um, how can this happen? And so that was deeply ingrained in me, my childhood experiences, and that got me to really pursue something like this very intensely.
Hmm.
It wasn't like I wasn't pursuing stock markets like a hobbyist. I was pursuing it like nothing else existed. Yeah.
That's a very traumatic experience to go through. How did that shape you and define your journey?
Taught me about how to survive because after my parents passed away, they also left us with a lot of debt to repay. And I was only about 9 years of age. How do you like? You need to learn what debt is
Hmm.
first, right? Need to learn about how money works, what debt is, how interest rate compounds, and how to learn how to earn soon. Like I knew as a matter of fact when I was a very young boy that I will perhaps need to start a business someday, right? And so it shaped me quite like um, these experiences are etched. You can't erase them. You know, it's not superficial.
How do you think about risk?
I have a risk first mindset. So it's always about, and I also grew up as a trader. I was once a professional trader for a short phase of my life, and I always thought, what would happen if I lose my principal? Because it was borrowed principal, and I would have had to repay.
Hmm.
And so it was always about minimizing the chances of loss, and so the risk reward thinking becomes quite means like it takes over your thought process overall. So yeah, I think that number one. Second, I believe that um, I mean this is a very deep, long subject about risk, but trying to minimize how much you lose is a good starting point.
Hmm.
Yeah. So that's how I always thought about it, whether it was starting a business, whether it was employing somebody or anything. Yeah. Always have a stop loss.
Yeah.
Yeah.
How does, obviously that is a well known concept in the stock markets, but how have you applied it in your business and in life in general?
So when we started the business, I was unable to raise capital, but I wasn't going to back out. I knew that I was going to start this stockbroking business because I saw this gap. The gap that I saw was that in finance, the financiers don't really understand tech. They understand the markets well, they understand operations and compliance well, but they don't understand technology and how you can use that as an enabler for growth and efficiency. And on the other hand, you have techies who do not understand finance
Hmm.
and the financial system at all, right? So, me having been the geek who studied the finance, the stock markets, and the system because I was obsessed with it, came to a point and thought maybe, like, while I was trying to get a job, I recognized that the places that I was trying to work at, they weren't too good at implementing tech and scaling for the modern India. So I recognized that very early on.
Hmm.
And so instead of like doing things the traditional way, I decided traditional way meaning try to build a SaaS company or a solutions company to help these businesses. I thought maybe the best way to go about it is by building an end-to-end user experience, which can only happen if you start the business and build the tech yourself. So we thought we can help bridge those two worlds in our own sweet way. And
Hmm.
that's what I've been doing over the last 10 years. So the conviction came from there. And the way we went about doing that is essentially by bootstrapping, uh, brick by brick. Um, day in and day out, we would focus on building and getting good at one thing at a time.
What do you think are some of the biggest inflection points that you've noticed in the psychology of traders or investors at large?
People who depended on so-called experts stopped believing that they were experts, and because there was money to be made in the markets as markets were going up, decided to actually put in the effort, watch news, read up on stocks, and actually invest on their own, making them more independent participants today than they ever were before.
Hmm.
But they today find a problem with the number of choices available, right? So it is, in my view, again, I might be wrong. The paradox of choice is that, let's say, if you have 100 choices and if you have to choose one, given that you have limited resources, you will regret not having chosen 99 others.
Hmm.
If you have two options, you'll regret one, right? So today there is this paradox of choice, which I believe is the main issue. And what I feel about it is that advisory is going to come back in a different format, more digital advisory, far more customized, and maybe even personalized advice.
Hmm.
Technology makes it possible today. Like back in 2017 and 18, you had robo advisors,
Yeah.
but they were not really robo, right? They were very plain Jane, like Excel spreadsheet based categorizations, low risk, medium risk, and high risk. But today, one can build a very scalable and personalized advisory engine.
Hmm.
And I feel that that's going to be the next big thing. Yeah,
Yeah, because with AI, it all becomes possible, right?
it does.
Yeah. So, how are you thinking about implementing that within your own business model?
We don't know that. It's kind of gray today because we primarily cater to DIY.
Hmm.
Like currently, most of our customers don't want our advice. That's not what we are known
Really?
for.
Okay.
Yeah, we're not known to give advice. We're
Hmm.
known to build a great trading platform. And our goal so far has been to be the best of the best.
Hmm.
Um, but we're not the traditional advisory, right? And that's not how they look at us. So if we were to offer anything to them in the
Hmm.
form of advisory, it would probably have to be to a specific cohort or actually get into that market with a very different offering, something that the traditional advisors don't foresee
Hmm.
or can't make happen because it conflicts with how you think about business also, right?
Yeah.
The building blocks of disruption begins with lazy incumbents
Hmm.
and the reluctance to change, or the inertia is just too heavy.
Hmm.
It's not about knowing that the change will happen. It's about not wanting to change, even if the change is going to happen.
Yeah, because there are many well-funded competitors that you've had.
Yeah.
Sorry, there are many well-funded competitors that you have, but they've grown significantly, expanded the customer base that they were initially started with. But you've stayed very focused on very active traders, right? Your goal has been to solve for serious traders.
Right. Yeah.
Do you see yourself expanding from a customer base perspective?
Yeah, we do see ourselves expanding, but the thing is, we feel that trading platforms, investing platforms in India today lack depth.
Hmm.
And we like to build depth. It gives us pleasure because we feel like there is a segment of the trading and investing audience that are active in the markets. And to them, evolution matters, like because their needs are expanding as they learn more about what can be done, right? So they need a business or a company that can enable that.
Hmm.
And that's who we are, and that's what we're about.
Hmm.
But going forward, I think, we've, like I said in the beginning, we're just getting warmed up. We understand capital markets as an industry, and maybe we could come up with something in the future.
Hmm.
I'm hopeful, I'm positive. We're always thinking in creative ways.
Hmm. We mentioned our love for macro in general.
Yeah.
Let's talk about where we are currently in the cycle because, we've had irrational exuberance in some pockets. And then, there are, the market has also gone sideways in terms of performance in the last year, right? And a lot of people might not understand where we are currently in the cycle or how to look at it from a macro perspective.
So, from a very, very macro perspective, like a 30,000
Yeah.
feet view perspective, only about 3% of India invests in mutual funds. Only about less than 4% of India's population invests in mutual funds. The country is a developing country. Um, Businesses are just starting to understand that they can create wealth in the capital markets by going public. We're seeing that as an economy, while we are so large, the per capita incomes are still like only like 2.5 lakhs roughly. So the capacity to invest is just coming in if you look at it. Of
Mm.
course, if you, it's vastly skewed because of the sheer number of people in India. Besides that, consumption patterns show that we're still in the basic consumption needs mostly as an economy, as a country. The median age of India is roughly 30, the marriageable age. New families are being formed.
Mm.
The population is likely to continue expanding. So, a lot of consumption related expenditure, which creates a lot of domestic demand, scope for businesses to build in the country. Um, Macroeconomic um, stats show us that we have a relatively stable currency. Politically, we are pretty stable. We've navigated the geopolitics and wars around the world very cleverly. And so we have great foreign exchange reserves, fiscal deficit in control, less than 5% of GDP. Debt to GDP is still intact. Tax collections are on the rise. Cash economy is on the decline. There are so many things working in our favor.
Mm.
So I believe it's a great time to invest in this decade, to stay invested this decade.
That's a perfect summary for the India opportunity, if one were to put it in
I
perspective.
just figured that I was just rambling away.
No, but that is the reason why people are looking at India as the next opportunity to invest in globally as well, right? But, there is a sense of shifting world order in one sense, with debt, plaguing countries like the US. And there is no solution to the debt problem of the US. So people are looking at different markets to invest in, and India has become very attractive from that
I
perspective.
agree.
In one of your interviews, I heard that you've sold off your US stocks and only investing in India. Is that true today as well?
I'm mostly invested in India. I've invested in India mostly, but I'm not only looking at India. I feel like the participants in India, whether they are fund managers, retail investors, or HMOs, we are a very overall, let's just say again, a 30,000 feet view.
Mm.
We're a very inward looking mindset. And we're looking at all our opportunities and probably pros, cons, opportunities, and threats inside out rather than outside in.
Mm.
So we need to look at it in the context of the world, and that's how I see it. Whatever the little ramblings that I took a short pause on is because if you look at all of those things in the context of the world, you will see that it's amazing because
Mm.
the rest of the world is aging. Yes, they have a lot of capital, they're developed. The fact that we are still developing is an opportunity in itself. Like in India, I sometimes look at the traffic jams. I hate traffic jams like everybody else does. Look at all the, you know, the just the chaos overall. And I think that, oh, living in a developed country must be amazing because everything is sorted out. But the opportunities actually lie in the challenges.
Yeah.
And so the big shift that you spoke of is not this year or next year. It's a decadal shift. It will take time for capital, for India to become the predominant destination for global capital flows.
Hmm.
And there are not too many options either.
Yeah.
Like us being a stable democracy, a $4 trillion+ economy, it just positions us, you
Hmm.
know?
And what do you think of about China's emergence or re-emergence in one sense? Because China has
Emergence.
always contributed the most significantly in terms of world's GDP,
Right.
and there was a decline in the middle, and now there's re-emergence again.
Yeah.
So people always think that the China trend is a recent trend, but actually China had a lot of dominance if you just go back to 1500s, 1600s from that
Right.
time frame,
Right. Right. Right.
and now there's re-emergence in one sense.
Yeah.
And when you think about, everyone talks about US to China and India coming into the picture as well. But what are some of the trends that you've personally noticed or what you're paying attention to?
After visiting China, I feel like we have so much to catch up on when it comes to infrastructure, manufacturing, and being organized. These centrally controlled economies have disadvantages, surely, but the advantages are often underestimated by those who live in democracies
Hmm.
because the sheer scale of development is just awe-inspiring in that sense. And it helps me feel positive about India's future potential. Um, so that's one part. With respect to them having gained dominance, I think that it was imminent. Um, when Deng Xiaoping became the president, he was inspired by the Singapore model,
Hmm.
which was inspired perhaps also by the Japanese model. And the ability to pull that off in a few decades is what's crazy,
Yeah.
right? Our ability to pull that off is contingent on the democratic process and the efficiency of our democratic process. Um, and so it is likely to be slower, but slowly but surely will be our
Hmm.
model. But they are going to become even more dominant, in my opinion. And today they are looked at as a gentle giant. You can't ignore China. I mean,
I don't
this
think people think of them as gentle, but because like in one
because
sense,
they haven't indulged in any wars,
yeah, that's true.
right? Let's look at the number of wars, or at least I am ignorant, maybe, but as far as my knowledge goes, they haven't had wars post independence.
Hmm.
Um, but they had a horrible situation back then with the whole civil war
Yeah.
before China became unified. But I just think that they are here to stay. There is lots that we need to learn from them and work with them, honestly.
Hmm.
There's no way to look at a world without China. It's
Hmm.
just not possible. That's the big thing. Yeah.
Yeah, in one sense, because there's so much said about how the Chinese government has enabled a lot of innovation because, they've acted as venture capitalists in one sense. They've fueled so much innovation just by pushing funds across different industries. They actually have 5-year plans on different industries and take a world view in terms of where industries are headed. In one sense, the Indian government is trying to model the same, where at least there is budget carved out for critical sectors, say defense, etc. now, and even space for that matter. So where do you think, from an industry perspective, we should focus on?
What China has done is they got really good at manufacturing. I'm not the first one who's saying this, it's well known. But the sheer scale and the way they executed it is massive, right?
Hmm.
Our gross capital, domestic capital formation is rather weak, and how much we invest in it is minimal. I think it's sub 25% of all the government revenues that come in
Hmm.
is invested in creating like fixed capital, right? Which enables like whether it is road transport, waterway transport, railways. For instance, our commercial railways um, Goods transport travels at an average speed of like 20 kilometers per hour, right? China, the commercial transport by rail is 200 kilometers, which is 10x. Our
Hmm.
passenger trains are at 40 kilometers or so. Over there is 400 kilometers. I've sat in one of those trains.
Yeah.
You can drink coffee, like you can just leave your coffee there at 400 kilometers per hour, and it wouldn't, you can be rest assured that it wouldn't spill.
Hmm.
Whereas over here, you can't say that one tenth the speed, right? So there's
Yeah.
lots for us to do if we have to get good at manufacturing. But besides manufacturing, because we are a service economy and all of that, can we leapfrog that necessity and become uh, a knowledge first um, industrialized economy, but more knowledge first based on our software and IT skills? I think that unless infrastructure is improved, we have to think that that's the way we got to do it.
Hmm.
Um, but yeah, I think it's possible, but with focus on software and IT services will continue to dominate
Hmm.
because that's the value we add to the rest of the world mostly. Like um, from a manufacturing perspective, there's a lot to be desired. Yeah.
Yeah, but here I would love to dive deep into the whole IT services sector, right? Because there's so much talk about. There was pretty much a bloodbath in these stocks because when Infosys, for example, tried to do a buyback,
Yeah.
they got so much flack saying that they should have just invested in OpenAI and not done things like not investing in tech for that matter. Where do you think some of these IT companies are
Who
headed?
made that comment, by the way?
It was all over the news, no?
Yeah. I think that's a very silly thing to say.
Yeah, but
Like,
actually, Vishal Sikka did have an opportunity to invest in OpenAI.
yeah, but
Yeah,
still, like, imagine if all the businessmen took all their money and just invested in a growth fund. What do you think would happen, right?
yeah.
This is something like that. Um, I think there is a grave misunderstanding around AI. It's people fear that it will take their jobs. It could take some jobs for sure. It's quite obvious that it will. But I think one needs to look at it more positively. The glass is half full. If we are an economy with millions of people who already understand technology better than the rest of the world, then we can make the most of it,
Hmm.
right? The demand for software, IT services, essentially achieving efficiency in all areas and all businesses of the world can be enhanced with the business proposition that our IT and software services have to offer. And that's
Hmm.
the way I see it. I don't have the answers. I just know that it's not the end of the world, right? And I think that the narrative, especially in the news, is scaremongering, to say the least.
Yeah.
And so people are just not able to think about it rationally. It's important to take two steps back and think about, so what? What's going to happen next? And
Hmm.
are we all going to become unemployed overnight? And that's not going to happen. The nature of competition is such that if one gets a leg up over you, the others will try to catch up, and so that'll keep things going.
Hmm. That's interesting.
Nobody knows the answers.
Exactly. Yeah, but there's so much narrative around, AI, job losses, etc.
Yeah, I'm more
But
comfortable knowing and saying that I don't know, but
hmm.
I'm positive about it, rather than saying no, it'll take your jobs and this, the extrapolate how many jobs will be taken or how much efficiency will be achieved across industries. The people who run these businesses don't know either, to be honest.
Exactly. Yeah. And you've often said that you're a counter cyclical investor.
I try to be, but right now, I mean, it just feels like the markets are up and with the valuations, there's not much opportunity to be counter cyclical, really.
Really? So you don't see any pockets of opportunity in that sense?
I do, but counter-cyclical investors are typically they're more the bargain hunters, right? They try to seek value in things. There are pockets of value, and I believe there will continue to be so, but the momentum investors have made massive amounts of money. And
Hmm.
so, yeah, it's a never-ending work in progress to sit and find stocks like that. Yeah.
Any sectors that stand out to you in terms of where you're looking to invest, say, over 5, 10 years?
I was very excited about Niti Aayog's 75-year report when it came out several years ago, actually. It was pre-COVID.
Hmm.
And I basically geeked out on it. to see where the opportunities lie. And I was surprised that, to my ignorance, there were so many areas of the economy which actually need attention. If we are going to become that second largest or third largest economy, a sizable, mature one, there are opportunities in almost every pocket, like you name it, including um, core industries, to be honest. Even things like energy production have a lot of opportunity.
Mm.
So there are opportunities everywhere. So just taking this example of energy production, 50% of India is still on coal.
Yeah.
Okay. 2% is on renewable. I think there are 5% or thereabouts is renewable clean energy. Nuclear is one,
Mm.
right? Around 30% of energy consumption is fossil fuels besides coal, that's petroleum products. Even in something like that, there is a lot of innovation and scope for growth,
Yeah.
right? Um, in logistics and transport, one of the most, anything that can go from becoming from inefficient to efficient, there's tremendous amount of scope there.
Mm.
I don't see too much scope in these highly valued startups that are going public. So my starting point is the process of elimination.
Mm.
And the opportunities that are very highly marketed, very well known, very highly valued, they're the ones that one needs to stay away from. Um, yeah. So I feel basic industries that are listed, often not very glamorized, have far more potential than the so-called new economy sectors, because there's nothing new in the new economy sectors besides the way they achieve uh,
Distribution.
the distribution,
Yeah.
right? The fundamentals are pretty much the same.
Yeah, I agree. Like some of these new age IPOs that are coming out at 100 P or 230 times P, the Lenskart example, which is the most recent one. How are the investors going to make money on those trades?
Well, don't ask me. I am not an advisor, remember? But I just think that investors are becoming wiser.
Hmm.
Um, my I was known to say and propagate that IPO stands for it's probably overpriced. But over time, my views have changed. Many IPOs have given results. But the most marketed ones, the ones that are scaled up
Hmm.
to be encashed, or using different parlance, um, a sheep that is, or chicken that are fed well enough to be butchered.
Hmm.
That's not how businesses need to be built. And that's not how IPOs need to be looked at,
Yeah.
right? The IPO should never be an exit terminal. It needs to be the start of a very promising long-term journey. That's what, like fundamentally speaking, that's what IPOs were for,
Yeah.
right? Raise capital and then grow. Yes, part of it can be offer for sale and fresh issue of capital, which it mostly is. But when you see that early investors just come and dump everything in the public markets at the expense of retail investors, I don't feel very good,
Yeah.
because we deal primarily with retail investors, not just retail investors, which we can talk about, but I don't feel very good. And I feel a sense of responsibility to tell people, why don't you look at this aspect?
Yeah, because as someone who started their journey with investing in IPOs, any advice to people who invest in IPOs a lot? Because what are some things to keep in mind?
I think the longevity is something that they need to keep in mind. By the way, the average holding period of IPOs is surprisingly short.
Of
It's
course,
like
yeah,
2 weeks.
yeah.
Like every day, mostly everyone's going for listing day
Mm.
gains. But they need to have a longer term perspective, because if not, then, like, what is the assumption in investing in a company that's valued at 200 times price to earning multiples, um, especially after the company just became profitable? You know what I
Yeah.
mean? So it just doesn't make any sense. And it feels like retail investors are looked at with contempt.
Mm.
Like, and I don't appreciate that.
You must see this behavior up close, right? Like it's
Because
happening on a
everyone's
daily
looking at it
basis.
from their own perspective. Like a businessman wants the maximum valuation,
Mm.
right? Obviously. Why? Because his peers got some valuation. So he has a benchmark in his or her mind. But as a capital markets, like a business, I look at the system as more um, like more from a holistic perspective. I feel like if valuations are reasonable, if expectations of founders and early investors are reasonable and long term, then it'll create a healthy ecosystem.
Yeah.
Otherwise, the trust that has taken so long to build can be easily broken.
Exactly. I think, we started when we were talking about the Montek Singh Ahluwalia episode and, how SEBI came into being, and then, how the Infosys IPO happened. I think, Infosys as an example of an IPO was truly one of those examples that has helped people create wealth. But you
Absolutely.
can't say that for some of the companies that are getting listed today,
Yeah,
right?
Infosys is Karnataka's pride. If
Hmm.
not for Infosys, I mean, what would our state be?
Hmm.
So a company was able to have that kind of impact on society. Infosys is a classic example, and it's a very inspiring story. Um, but speaking of how others need, like, unless entrepreneurs think that way, creating value for others and for the not just their shareholders, but all the stakeholders as well. Everyone needs to benefit from it overall. And
Hmm.
so, if it's looked at from that perspective, it's great. But to your question was more along the lines of,
The quality of IPOs happening today.
yeah, so I believe the quality of IPOs are good. Look, SEBI has done a great job in regulating the IPO market,
Hmm.
right? Of course, they cannot set the price. So they can't put a ceiling limit on how much a company should be valued because it's supposed to be determined by demand and supply, the forces of the market itself. But overall, we see that we have IPOs from different industries. It's not just IT companies. We see a lot of these manufacturing companies going public.
Hmm.
So they have raised a lot of capital. Like last year, if you look at the maximum amount of capital raised in the primary markets, it was automobile industry. Financial services and IT and all were way down.
Yeah.
Energy producers, all of them have raised a lot, especially manufacturers, let's just say, right? So the quality of IPOs are going up. SEBI has taken measures to ensure that, like, there are some guardrails so investors in smaller IPOs don't get taken for a ride.
Hmm.
The SEBI annual report is very eye-opening in terms of the number of things that they have actually done to make the primary markets more resilient. But they don't catch the public attention. All of this happens behind the scenes. So
Hmm.
I'm confident that over the next 5 years, we're going to see better and better IPOs. And because of these guardrails, investors' interests will be more safeguarded.
Hmm.
That's what I think.
That SEBI's report about how 91% or 93% of traders actually lose money.
The most controversial one of all.
Yeah,
Yeah,
let's talk about that
sure.
because I'm sure you witnessed this happening on your platform.
Yeah.
What are some insights there?
90% plus don't lose on our platform. So far fewer lose relative to the average. But look, it's no surprise. The nature of any zero sum game, such as trading in the derivative markets, is not winner take all, but it's always few people will win and others will lose. It's a zero sum game at the end of it, right?
Hmm.
And in reality, it's a negative sum game because there are transaction costs. And so that's just the nature of competition. The best will always win. But competition is a good thing. There are other things to benefit from as a result of this. Price discovery is one of them, liquidity. Like all of these things are often not given the importance they deserve. If you do not have speculators in the markets will become more inefficient. You
Hmm.
cannot have two value investors sitting on the other side of the table, opposite sides of the table, and negotiating with each other, right? Because none of them will be willing to pay a rupee extra
Yeah.
to buy or to buy or sell for a rupee less. So you need risk takers. Speculators are essentially risk takers, and risk taking is part and parcel of the financial markets, right? And they express this risk on a day-to-day basis by trading in the derivative markets or equity markets or commodity markets, and it's it needs to be encouraged, in my opinion, at least not curbed.
Hmm.
They are already very highly taxed. Today, securities transaction taxes are quite high, and they have been going up,
Yeah.
not down, right? Um, and not other countries don't have this tax. There may be a few, but
Hmm.
most of them don't have securities transaction tax. So maybe some guardrails around um, maybe the kind of speculation, but curbing speculation could do more harm than good, in my opinion.
Hmm.
Having said that, regardless of what regulations are passed or regardless of how educated the participants are, the nature of the game will continue to remain the same. There will always be the best guys winning, and the majority who are average or below will
Hmm.
either stay break even or lose. That's just the nature of the beast.
Yeah.
There's no denying that. We must accept that. And there may be times in the future, if such studies were to be done, you could see um, that it won't be 90%, it could be like 85%, sometimes 80%. But it depends on the market cycle as well.
Hmm. Yeah, because that takes me back to the example of, say, fantasy sports, right? Like we heard what happened with Dream 11, which had rapidly scaled up, and
Absolutely.
the behavior there was similar, right? Like in terms of the have-nots actually losing more money, which is why SEBI needed retail protection in one sense. Is that a common behavior that you see as well? Like the bottom of the pyramid losing more.
No, but these are two very different things, and I'd
Hmm.
like to clarify. On the one hand, we are talking about a very highly regulated, a well regulated system.
Hmm.
You have SEBI, and there are exchanges, there are brokers that are regulated, and the instruments that are trading have gone through an entire process, right? They have matured,
Yeah.
and it also is to do with participating in the economy directly or indirectly,
Hmm.
depending on the way the one looks at it. On the other hand, we have gambling. Dream 11 or the other contemporaries essentially is about betting on like sports or cards or rummy, or rummy is much bigger than poker in India.
Hmm.
So that's essentially gambling. And the penetration of these apps or these businesses have been much, much higher than the capital markets, by the
Yeah.
way. Right? I read somewhere that the penetration could be as high as like 3 to 400 million in India.
Hmm.
It's easier to adopt, right? Playing cards is like can become everyone's pastime, and with real money, they're losing like the bottom of the pyramid, which have barely any savings, can destroy whatever little they have
Hmm.
by by indulging in gambling. That's what that's about,
Yeah.
right? So it was it the problem was big enough to concern the government because they felt that it is penetrating the social fabric of society.
Hmm.
That's very, very different from the capital markets.
Hmm. So then, what do you think about SEBI's regulations? Do you think they stifle innovation in any way, or do you think more regulation is actually helpful for the industry to keep growing?
They don't stifle innovation. SEBI is a very proactive regulator. And I really appreciate all the things that they've done over the last 10 years that I have been observing them very closely for.
Hmm.
Um, and they don't get the credit for the amount of work that they have done. Whether it is to do with protecting retail investors in primary markets, like I mentioned, or the secondary markets or
Hmm.
derivative markets, the objective is to protect investors' interests, right? And so they've done a fabulous job in doing that. Like, imagine what the world would be like without SEBI. It'd be like how the jungle works. Like the controller of capital issues pre SEBI, which was the regulator was called controller of capital issues, run very differently. It failed miserably. And so the birth of SEBI is one of the key reasons why markets have expanded. And
Yeah.
so yeah.
Do you think there are things that SEBI should do for the markets?
I think they should encourage more people to participate in markets without curbing retail trading too much. But I think at least they've, by increasing awareness about how hazardous trading can be for unknowing, unprepared investors, they've done a great job. So that by itself has brought down participation by close to 20 to 25%, by the way. The share of volumes have dropped a lot this year, close to 20-25%. And also, they disincentivized intermediaries like us, meaning all stockbrokers, from earning extra, like the rebates that they would earn from the exchanges, thereby disincentivizing them from promoting derivatives trading. So while they are not saying ban it completely, they're at least disincentivizing and increasing awareness, which I believe is a very constructive approach to take.
How has that impacted your business and revenues?
Our revenues have gone down. Participation has saturated relative to last year. But that's not just us, it's everybody. Look, but that's how we need to look at the positive side of regulations. We can't always just keep looking at it cynically, because looked at from one perspective, India has only 1 crore active traders. That's it, right? Now, in any given year, you have 4 crore people who have traded at least once, or traded or invested once a year. That's it. So there's so much scope to grow. And if we are aiming to achieve like a 30-40% participation rate as a percentage of population, then of course we need well-regulated markets, right?
Do you think we'll get to 30-40% market participation?
Yes, but not in this decade. Next decade, maybe.
Yeah, because financialization of savings is a big theme, right? And especially the younger generation wants to be 100% exposed to equities sometimes, or
That's
like,
not true,
or
actually.
majority, I
Right.
would say, 50 to 80%. Or is that
That's how it
different?
appears from the outside. Now, with all the hype around mutual fund sahi hai, SIP Crore, with Sachin Tendulkar, Rohit Sharma, and all the big celebrities endorsing mutual funds, you still have only around 5 crore unique mutual fund investors, right? In terms of the number of F&O traders, for example, on a monthly basis, we only have like 35 lakh active traders in the F&O markets. That's it, right? But the rhetoric and media attention is so vast that it feels like almost everybody's trading derivative markets. That's not true.
That's I didn't know these numbers, but like the record inflows that equities is seeing,
Yeah.
like that is truly unlocked domestic capital in one sense.
It has, because the wealth is skewed, right? If the upper end of the pyramid of wealth invests in the markets, then you get a higher share of wallet, share of savings. So
Yeah.
from that perspective, the flows have been rather encouraging, but it also kind of blinds us to the participation rate, right? But in terms of the flows itself, it's a very interesting topic that you brought up, because while we have north of 25,000 crores coming in, everyone's focused on the gross flows, but the net flows tend to be around half of that. So the net flows like could be 12 or 13,000 crores. And the average SIP duration is just 3 years.
Yeah.
That's it. So how many are really building long-term wealth with mutual funds?
There's a funny story because, I think all the funds market themselves that, in 20 years,
Yeah.
your 100 rupees would be worth, say, 100x, right?
Yeah.
But no one stays invested for that long.
Yeah, because I think um, those who are investing a higher portion of their savings in the markets. It would be ideal if they invest a smaller portion of their net savings in markets, just so that they don't feel the need to liquidate that 3 years down the line. That's the more important thing, because SIP by design is designed to build patience in the investor's psyche, because you're not deploying all your money at one go. Typically, lump sum investors tend to be more finicky. because
Yeah.
the mark to market impact can be rather severe. But for an SIP investor, the way it's designed, you can stay in there much more long term. But the money you make from this investing style, which is accumulating every month, happens only in sideways markets or down markets.
Hmm.
What's happened since COVID is everyone's accumulating on the rise. So their um, best outcomes will only happen after 5 years, not
Yeah.
now. But how many of them will stay invested is a big question mark, especially because everyone's constantly worrying about FPIs pulling out money,
Hmm.
right? And because we look at it from the inside out, we think that they know something that we don't, or they're the smart money and we're dumb money. It's really not like that, because
That's how it's positioned in the
that's how
media,
it's positioned, because
unfortunately.
we're all sort of taught to think in the silo
Hmm.
and think from inside out rather than outside in. But those who have global exposure know. And hot money does move in and out of countries like this. And there are other aspects to it which we don't consider, which is currency depreciation.
Hmm.
India loses the Indian rupee loses around 4% on average every year, right? So if they're optimizing to earn returns in dollars, in dollar terms, then obviously um, they will try to time the currency aspect as well, right?
Hmm.
And they're playing commodities, they're playing emerging markets as a basket. And so their decision making framework includes all of this, which we don't really consider when we read about FPI outflows as
Yeah.
such. And by the way, they were net investors, by the way,
Hmm.
last year.
Yeah.
So there were around 1.5 lakh crores outflows from FPIs for the in FY20, like FY25 last year. But they invested a little more than that, like 1,60,000 crores in the debt markets.
Hmm.
So all in all, there was net inflow.
Yeah.
So we're not really tracking that because nobody wants to.
Yeah, that doesn't get the headlines that it deserves. But, I've also heard you say that you stay very concentrated in maybe less than five stocks in your personal portfolio. That is very high level of concentration and goes against the mainstream advice of diversification. Help us think through why you believe in that.
Much of my net worth comes from one stock, right? Which is my own business.
Hmm.
And so if like north of 99% of my holdings are just one stock, it doesn't bother me that my portfolio is just five stocks, because it's five other businesses in my
Hmm.
world, right? And so that's the way I see them. Um, and also because the holding period is much longer, every business needs time to play out. So it's not really a trade, more like investments.
Hmm.
And I believe that that's the way to really make money. One has to be more a sharpshooter than a machine gunner. Like, and to be able to be able to create wealth, you need confidence in your investments. And if you want confidence in your investments, you need a lot of research. And so it's that process that makes me comfortable with it.
Hmm. So,
Yeah.
how long have you been invested in some of these
Not
companies?
much. You see, the nature of our own business is that it is very demanding of capital. While it is capital light uh, in how it's perceived, because of margining requirements, you need to maintain net worth,
Hmm.
liquid net worth, which is needed at any given day in the business. But I have been doing it post COVID. Yeah, it's a gradual accumulate, not SIP, but
Yeah.
it's work in progress, I'd say. Yeah.
Help us, because the audience is sophisticated in, the people who watch are like HNIs, family offices,
Yeah.
investors, and promoters themselves. Help us think through this a little more,
All right.
because
Yeah.
the common narrative is do SIPs or do a PMS or AIF for that
Yeah.
matter,
Yeah.
versus, taking such concentrated bets. Whereas most people who are the successful investors make money in a few stocks, right? So it seems like the right thing to do,
Yeah.
but it's very contrarian to what is like, usually spoken
Now, if you
about.
look at them as businesses, then it makes sense to have a few businesses in which you are concentrated in, right? Like I mean, I'm sure you've been involved in business for the better part of your career. Don't you think a businessman, although diversified, mostly has maximum five businesses? One being the dominant one, which has led
Usually one or two end up being the cash cows,
cash
while the
cows.
rest just suck
Use the
the
cash
capital.
cows to maybe start new businesses, maybe two or three new businesses. Why do you think that is? Why only five and why not 100? Because it won't move the needle. Like the same thing goes for investing. If let's say you own 100 stocks in your portfolio, each one represents 1%. Even if that 1% business doubles or triples, how much return have you really made? That is not much. So concentration is the only way to build wealth, unless you're a trader. If you're a trader, then you don't need to really concentrate that much because you can. The nature of trading helps you to compound money differently, in a much faster rate if you're good at it. But for investors, concentration is perhaps the best way that I know of that you can make big money. And
You pretty much killing the business of, say, PMSs, AIFs,
not really. Why?
because they're all diversified across 15, 20, even 30, 35 stocks, right?
Yeah, but look, mutual funds, for example, have to invest because they have liquidity criteria. Like they can't invest in companies that you can't sell when there's redemption pressure, for instance. Like they will fail SEBI stress testing
Yeah.
if they invest in say 5 or 10 businesses. It's impractical. There was one. Anyways, that's besides the point. But the way to look at it is any open-ended investment scheme, such as a mutual fund, will need to prioritize liquidity over opportunity. That's just the way it is. Now, within mutual funds, if you look at, say, a mid cap fund or a small cap fund, right, even they will need to prioritize liquidity over just sheer returns. If my understanding is right, the average time it takes to liquidate 50% of a mid cap portfolio is 7 days. If a fund manager decides that he wants to sell off his portfolio because there's redemption pressure, it'll take him 7 days to sell that. And for a small cap, I think it's 2 weeks, right? Although it's an open ended fund investing in stocks with market caps, decent market caps. But if you're a long term investor trying to create real wealth, you don't have those pressures. And so you can invest in companies without worrying about exit. But with respect to PMS and AI, especially PMS, I think PMSs are way too diversified. The design of the PMS structure is meant for concentrated investing, but in reality, what has happened is that they all hug the benchmark, like and mostly either the Nifty or the BSE 500 TRI benchmark. And it's become a very risk averse style of investing because investors also review them and evaluate them based on their quarterly performance, which is not how it should be. Yeah, so unfortunately, they learn from how mutual funds are evaluated based on their daily NAV, and then they start evaluating the PMSs on a monthly, quarterly basis, which disincentivizes the fund managers to take risk.
Yeah, that's true. So, any timeless principles that you've learned from, like, observing so many retail participants' behavior? What are the things that you've learned in terms of takeaways? If you just had to put like three biggest learnings from all the activity that you've done personally in terms of investments and also watching others in terms of how they invest.
My learnings from what kind of investors, but I can give you insights on
The
various
biggest
kinds.
learnings, like, if like there were three takeaways for any kind of investors, because, like, ultimately I believe when you're investing, you're buying into a business,
Right,
right? At
right.
least that's how I think about it. But you're not always looking at it just from a return lens. You have to look at it from risk reward, liquidity. It's a very personal decision at the end of the day.
Right.
So if someone just had to have a framework for how they should think about investing, what would that be?
Um, I think number one, I feel investors need to recognize the hazards of herd mindset, because the herd instinct inhibits you from creating wealth. So they need to recognize the herd instinct within them. That's the first big thing. Second, it's important to learn from our predecessors, the generation before us, and their style of investing. because very often you will see that um, the parents' generation invested in IPOs, maybe at stretched valuations back in the day, but they've held them for like 20 years or so, or
Hmm.
much longer than that, and now the returns are just unbelievable. Like, and in hindsight, they did the right thing. Today, how we deal with information will make a big difference to your returns. Back then, when one invested in IPO, they did not have demat accounts, right? So they just had like the records of their IPO investments, and
Share
they would,
certificates.
yeah, share
Yeah.
certificates, and you would get a notice of dividends every once in a while. And so it wouldn't bother them on a day-to-day basis. They wouldn't be
Hmm.
watching news all day long on an everyday basis either. So they didn't need as much patience, and they didn't have to deal with this chaos on a day-to-day basis that investors today have to. So it's much harder today to not just think long term, but to be a long term investor.
Hmm.
That's the big challenge that one needs to surmount in our generation.
Yeah.
Because at any given point in time, let's say you're investing in a stock and you're also trading, right? So you're looking at your long term holdings on a daily basis, and then you're feeling good or bad about a small percentage return. Like if it goes up 5%, you feel ecstatic. It goes down 5%, you want to think about exiting and
Yeah.
re-entering at a lower price and optimize your. So essentially, what has happened is investors have become traders,
Hmm.
not knowing it themselves for the
Yeah.
most part. Yeah.
Yeah, because the platforms make it so easy in terms of accessibility, yeah, having it on your fingertips,
Yeah.
being able to take leverage on top of what you have.
That's right.
Every day I'm bombarded with take credit or take loans against your holdings, etc. Those kind of messages.
Yeah.
So it's sort of become gamified,
Yeah.
but people don't realize the consumer psychology that drives all these gamification tactics that some of these companies play, because it's like social media, how it's supposed to keep you hooked on to these
Yeah, but
platforms.
SEBI has discouraged that a lot.
Hmm.
Like they don't like when you do a payment on GPay, you have the confetti burst, right?
Yeah.
You're not allowed to do that on any trading platform. You will not notice this on any trading platform.
Hmm. Interesting.
That's
Yeah.
because it is prohibited by SEBI.
Hmm.
Also, um, with respect to credit for trading, with margin trading facility, for instance, which is not a very large book in the countries. Let me give you some stats to help you understand. Retail investors own around 40 lakh crores in market cap. That's around 10% of equity market capitalization in India. The leveraged investing, which is MTF, is only 1 lakh crores.
Oh, okay. Hmm.
Right? So it's a very small portion. That's what I'm saying. So the narrative often takes over, and then we think that Indian markets are not leveraged
Hmm.
compared to developed markets. But any developing markets, these are the characteristics. They will, at one stage, start to become leveraged as
Hmm.
long as the leverage is in control. For example, the maximum leverage that you can trade with is 4x
Yeah.
your capital. That's it, right? And so it keeps everything in check. It guards against liquidation risk. So the overall risk parameter, systemic risk, market risk are in control in India as compared to other developing markets.
Hmm.
But yeah, I think that's what I think.
And in terms of, we've discussed so much around markets and retail behavior, etc. But I want to take you back to your own example of how to inculcate a resilient mindset. I read that, you're into martial arts and you play chess. What are some cross-disciplinary learnings that you've been able to apply from those disciplines into your personal life?
Well, I really enjoyed martial arts from when I was growing up, um, I've but I'm still an enthusiast. I'm not a professional, I must confess. I do enjoy jujitsu and judo because it teaches you a lot of things about life and how to navigate it, especially on how to um, use force, momentum against your opponent, or put in another context, how to face adversity without clashing with it, right? How to turn a disadvantage into an advantage. These are things you learn physically in the realm of martial arts. With chess, it's chess is about outsmarting the others, right? It's a positional game, and to me, it has taught me a lot about how to navigate life itself, how to create opportunities from adversities, um, and how one move can change the game. To recognize the importance of a swift pivot is what chess has taught me a lot.
Any examples that come to mind where such an instance happened while building fires?
Oh, many instances actually. So I mean, you can the n number of things that chess teaches you about life, whether it's about valuing what you have, learning when to sacrifice and make a trade-off, learning when not to be too offensive, learning how to organize an offensive attack. There are so many things that one can learn from it. If you are attuned to it, you can also learn chess theory and never pay attention to any of this stuff. But in context of what it's taught me in business is because we've had to do it all by ourselves. We didn't have like a board of advisors, investors to back us. So we just went with the flow, knowing that every move must have a purpose. Every move, everything that you do costs money. And what is done cannot be undone in chess and in life. So
Yeah.
learning the importance of that uh, has helped us a lot, I can say. Yeah.
You said that you bootstrapped the business all along by taking on loans.
Yeah.
How did you? It is a tremendous feat. Honestly, I have so much respect for anyone who bootstraps their businesses because the VC funding route is actually an easier path, but it does come with its own, the challenges. But in terms of bootstrapping, it's exceptionally hard because you literally have to pay attention to every piece of the puzzle in one sense, right? So, how were you able to put it all together?
When you fund something with loans, it makes you more agile. Um, but you know your boundaries. You know how far you can stretch with the limited amount of capital because, unlike equity capital, this needs to be repaid. And you have to earn to repay this money that you've borrowed, right? So the focus shifts from just scaling the business to scaling profitably. And to be profitable at a very early stage, you will need to be conscious about the costs you incur. Like that, you cannot afford to blow out because you don't know if you can afford a second loan, right? So as a result, um, we understood how to scale sustainably and learn how to make important trade-offs. Like we did not build a mutual fund platform until like 3 years ago, although our business is almost a decade in the making, because we did not feel that it was important enough at this juncture. Because direct mutual funds don't earn platforms any money whatsoever.
Yeah.
So we did focus on what we think our core traders want, and we did it one thing at a time. Another thing that it makes you conscious about is that it's always survival first and victory later. With funded startups, it's the opposite. It's victory at any cost without having to consider survival as the fundamental important aspect of business. So it just flips you completely. And the disadvantages of bootstrapping can be, I'm not saying it is, but what it can be that they become conservative over a period of time because they're so used to growing at a moderate pace that when there is opportunity to really scale and boom, their risk-taking appetite would have moderated, right? Whereas the funded guy can just go uh, no holds barred, you know.
Funny how all the dots connect, right? Like you learned lessons about survival when you were 9 years old,
Yeah,
pretty much. Where do you think that has helped you in your bootstrap journey as well?
I believe so. Yeah, I believe so. Like, I think it is really important for one to go through difficult phases in life. Mine was a certain type, and I hope nobody has to go through it. But I still feel difficult phases in life will teach you far more than the rosy, happy phases. All right. And the difficult phases of life etches you far more than the superficial happy phases, which you don't even remember mostly.
Hmm.
Right? If you think about it, you often remember the worst phases of your life first,
Yeah.
than the most happy ones, because they pass off, as
Hmm.
especially for those who haven't had such experiences. If you look at it from the context of health, right, it's like building immunity, and better immunity builds you to handle health adversities better.
Yeah.
Like, you'll be immune to infections, diseases, you can recover faster, and so on. So,
It
yeah,
sounds
that's what
like
I think.
you've done a lot of inner work to be able to achieve everything that
Not
you have.
really, not really. I haven't done inner work, so to speak. I just like to think, and I really enjoy reading philosophy, exploring different ideas overall, and most importantly, I enjoy connecting the dots. I think that gives me more pleasure than anything else.
Hmm.
And yeah, I'm not very not like inner work. Almost sounds like therapy and spirituality. While I may be inclined to do so, I'm really not on that path now.
And this I think we this has been a fantastic conversation. We've spoken about everything under the sun, be it macro, building fires, and also observing behavior closely in terms of market greed and fear. But if you were to think about your legacy, I know you're very young, but like, what are some things that you think about when you think about legacy or wealth?
Yeah.
What do those things mean to you?
First of all, I wish I started much earlier in life. Um, I wish I started when I was 20 instead of like 26, 25. 26 is when we started the company. But in terms of legacy, I hope Fires outlasts me as a person. The ambition is to build an institution that scales far beyond my own abilities, and hopefully I can make it happen during my lifetime. So that's the ambition, and so I don't think of legacy too much in terms of how much money we will be able to make alone, because I think that's a byproduct of the kind of business you are in and
Hmm.
how large that business becomes. So yeah, I think that's the kind of legacy, and we want to play an important part in the development of India, and I feel being positioned as a full stack financial entity, right? While India transforms from developing to developed, gives me a sense of meaning.
Hmm.
And so maybe the next decade will be very exciting as we diversify our business from just a trading platform to more a full stack um, asset management and perhaps an investment bank.
Interesting.
Yeah.
So that's the direction that you aspire to go
Yeah,
towards?
why not? Because we really enjoy this. And so, because there is no exit gate or exit timeline, uh, hopefully we should be able to do this for as long as we can. And it's exciting to just be around different opportunities, businesses, and to add some value, not just invest in them, and perhaps even add some value to them
Hmm.
going forward. And I don't really know what the future holds for us, but the possibilities are exciting.
Hmm. More power to you on this mission. Just my last and final question, since you mentioned your love for reading,
Yeah.
which books have had the most profound impact on you?
Wow, I wasn't prepared for this. I read quite a bit, and now it's rather sporadic because I now read more regulation related reports than books. Um, but a recent book that I read, which I like a lot, is Man's Search for Meaning. It was written by Viktor
Viktor
Frankl,
Frankl.
a man who unfortunately had to live through the concentration camps, and his learnings were that the purpose of life is to find meaning in it, And so he's considered the founder of logotherapy, which basically helps people to find meaning in their lives, as opposed to previous psychiatrists and psychologists like Adler, a very famous one before him. He said that the pursuit of life is for power. Sigmund Freud, I think, said life is all about the pursuit of pleasure. Right. So, but I resonated with Frankl when he said, it's about none of that. It's about the pursuit of trying to find meaning in life. And
Yeah,
so that's an
I
amazing.
that line, almost I read this book almost a decade ago with the line that, if you have the why, you can survive
Oh, yeah,
anything.
I think
You can
he said
survive
that,
the
right?
how or
Yeah.
what,
Yeah.
because he was living through concentration camps at that point, but he had such a strong why that he
Yeah.
survived that
Yeah. Yeah.
experience. But what a profound note to end this episode with. Thank you, Tejas, for being here and joining us today.
Thanks. It was such a lovely conversation. I really enjoyed it. I
Thank
love
you.
the kind of work that you've been doing too. Kudos to you for that.
Thank you. I appreciate it.
Thanks.
Thank you for watching today's video. I hope you found it useful. If you enjoyed watching the video, please remember to hit the subscribe button. It really helps us in getting better and better content across to you.